Welcome to Takes Invest. We're talking about investing, finance, and professional development. As the recording time of 5:08 p.m. on Eastern Time, Ethereum coin trading $3,206, down about 5.88% so far. On the other crypto market, see clearly on the key coins are in the red territory, but some of the altcoins are a little bit more severe and even further, bearish pressure at the moment. So we'll dive into the altcoin side of the house in a bit on the technical front. And on the equity side, Dow Jones is still trying to linger on the post-market after market hours, up about 0.10%. And Nasdaq is currently down about 1%, while S&P is kind of flat, but still in the red territory, down about 0.02% in post-market after market hours. And I had a relatively rough day today. I had like about 7 meetings back to back to back to back. So my mind is all out of whack right now. But I was still keeping my eyes on the chart just to look at, how we're trending, right? Just to make sure that I'm maneuvering through the market dynamics accordingly. So beside today's relatively disappointing job numbers, we also saw collectively another spiking rate that happened today. We surged to about 1.81% in comparison to already breaking yesterday's record of 1.75% on the 10-year yield rate on the bonds, right? So as we saw that, we saw another dip of a plunge, if you may, on the entire market, both on the equity side but also on the crypto side, right? And at one point, we plunged to all the way to approximately $3,000. To be more specific, $3,077.66 for Ethereum, and for Bitcoin almost breaking through the 40,000 mark, right? So whenever you hear the spike rates, it obviously triangulates into, just negativity across the spectrum of the market, right? Because people have to pay a higher interest rate for the same, debt instrument that they've had historically, which will subsequently marginalize the profitability margins that corporate companies will able to obviously cultivate. And that could subsequently have a domino effect onto other things, right? Maybe layoffs, maybe in terms of cutting down the capital expenditure on the facilities front, or maybe having to cut off one of their even projects that they could have done before, but now they don't really have that wiggle room or leverage to do so anymore. So it's just making everything tighter, and less comfortable across the spectrum. And that will also obviously have a direct correlation to, cutting off the margins for crypto, knowing the fact that, there's still a leverage issue going on in crypto. There's many investors in the ecosystem that are using or resorting to using debt as a form of instruments, borrowing against to buy crypto, which obviously, as we saw from a flash crash that happened before New Year's, the reason that we got wiped out was because of that leverage wipeout. So whenever you see the spiking rates, that's typically the triangulations that we see in front of us. In addition to the spiking rates and obviously the job numbers, which are both just two ugly numbers or ugly factors that we've seen today, there are still the percolating COVID cases that we're seeing on a domestic level, on the global level as well. So more negative affectation among the entire market. And also, if you saw today, we also saw people fleeing away from tech stocks all over again to more of the ETF and dividend stocks. Obviously, the dividend stocks are kind of normalizing a bit from the previous surge that we've seen across the spectrum. And I'll say across multiple of them are relatively overbought at the moment because of the fact that people are fleeing to more safe haven instruments. Dividend stocks are typically a little bit more stable, right? More, on the mature side of the economical cycle and in terms of the business cycle as well. But they guarantee investors some sort of monthly dividend payments or a quarterly dividend payments, which investors like some foreseeable you know, profitability that they could take in, right? So that's why they incur in more typically the dividend stocks, right? So we are seeing a lot of just fear mongering, fleeing to safe haven type of affectation. And also today, remember, it's a Friday, so we do have the weekend affectation that's also in play, right? So I think I named about like 5 to 6 factors already. Forgive me if I'm missing one or two other ones, but I mean, it is already a lot of just negative pressure across the board, driving the negative sentiments that we see in front of us, right? So enough of the story stitching. Let's just look into the technical to see where we at right now. So again, with respect to recording time of 5:14 p.m. on Eastern time, we're basically at the 3,150. We're basically $52 away from the current level with a 28.85 out of 70. So really oversold right now. And at some point we were at like somewhere around like the 23, 22 when we hit to the 3,000 mark, and immediately people bought up like crazy. It was like selling a hotcakes. And congrats to the ones actually bought in. But the real level that we know technically, if we kind of continue to leap down, which I don't really foresee that to be the case, because like that's not really logical, would be the 2,850, right? So if you want to put your limit order in, I think that's logical, but I don't think that's really going to be coming into reality because that's really, really hard to get there. And historically, we have already matched basically the previous low on an RSI scale when we were back in March 2020 when COVID broke out for the first time, right? So we have already seen a black sheep affectation. So right now we're just seeing the quadruple whammy, or even more. Just like 5, 6 whammies all over collectively driving the sell-off that we're seeing for a while now, right? Ever since basically before New Year's in November. With respect to Bitcoin, it's basically in a comparable fashion at the 28.84, so I would say RSI is identical. And right now we're relatively oversold. At one point, again, right, we almost cracked the 40, but we couldn't. We linger around 4,735, which is exactly the level that we bounce. We know we would bounce, and you could see clearly that the next level, if we're gonna go down to, will be somewhere around 40. So we bounce from that level. That's a relatively substantive one. But if we break that, we have a long way to fall to basically 38, or more specifically 37,500 from here. And with respect to Dogecoin at 1546, we were relatively oversold at 34 out of 70, so just a hair below the oversold level, right? So anywhere from current level to, I would say anywhere from current level below is still good. I think we are already oversold, so not a better level to incur risk right now for long term, especially much better than the ways we were before when we were running all-time high. Cardano's down about 5% right now. At the moment, 120 would be the bounce, right, at the 39 out of 70. So actually not terrible. But again, if you bought in at the 120 earlier today, it will be, that was the level, the 119, right? Do I see 102? I don't think really it's possible, but I don't really think that's going to be the case because of how substantive the 120 is in comparisons to the historicals, right? You could see every single time we get there, we bounce off from it. So I feel relatively confident that we'll stay. But if we break, which I would give that maybe like a 20% certainty, that will go down to the next level to 102. Solana is at D. You can see that we clearly bounce off of the 133, right? 155, 133, 113 are still the levels. I think right now it's not terrible already, right? Obviously, if you bought in 133 from your limit order, that would be great, right? Because at that time, we were basically at the 25 out of 70 at that point. XRP is down about 2.3% at the moment, 76. So anywhere from the current level to the 75 is still better level for us. 36 out of 70, so it's not terrible. And I think the risk is still worth taking in comparisons to when we're running really high at the 134 back when we're like previously peaks that we have incurred. Polkadot is down about 6% right now, anywhere from current level to the bottom 23 with the 40 out of 70, so it's not terrible, but not the best in comparisons to other opportunities. Algorand is about 8% right now, 144s, but again, anywhere from 136 to below is still better level for us with the 43 out of 70. Shiba Inu is in the strike zone right now. Again, right, anywhere from 2950 all the way to 900 is still good for us in terms of incurring risk. MAC test at 208 right now. We're about to break $2. As we break $2, we're gonna go to 175, 143 from there. AVAX is still selling down. The next level is gonna go down to 80, so it's a good level to encourage as a first level, because that's where we're gonna bounce basically. And then it's gonna be 60 if we break the 80, right? Luna's down about 10% right now. It's going to be in more of a sell-off with the 40 out of 70. So ideally at the first level, 62, 52 to 45 from here. And with respect to Enron, we are at 197. Very oversold. Let's see how oversold we are. We are basically at the 30 out of 70. So relatively oversold. I think right now is not a terrible level to incur long-term risk from here. And with respect to risk management level, these are the levels to identify for the respective assets here. So let me know if you have any questions. And you can see clearly we are around like the attractive and steal levels already. So take the logical risk, but not go all in, despite how, seems like it's a steal level right now, right? But Black Swan news and Black Swan events happens all the time. So it's always important to have your cash reserve on the side to protect yourself, right? So really appreciate you. Let me know how it goes and take care.